Welcome back to Alpha Recap. I'm glad you joined us for today's end-of-week recap. We covered a compact set of market signals that mattered into the holiday. And as always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to unpack from the close. Earnings-driven rallies, a holiday information gap, an AI summit cameo, and a wave of filings. What really stands out here is how concentrated these signals were.
Totally. Let's start with the headline mover, Werner. And the number that really caught our eye? Werner jumped 9.7% to $30.11 on Thursday, April 2nd, after its fourth quarter release.
Yeah, that was a big one-day move. I mean, when you step back and look at this, a near 10% rally screams momentum. But it also raises the classic question. Is this a sustainable re-rating or just short-term positioning?
Analysts uniformly treated that as a near-term bullish momentum signal. Some said the quarter probably beat expectations, or that the name had been oversold and buyers piled in. Others warned that after a meaningful run, single-day jumps often consolidate or pull back.
Right, right. And the other thing is, for a transport and logistics operator, the real details matter. Margins, guidance, fleet utilization. Momentum without institutional flow behind it could be fragile.
Big move.
Not what anyone expected.
Switching gears, the macro context. Markets were closed on Good Friday, April 3rd, which created a real information gap heading into a major U.S. payrolls release. Futures had slipped, and that meant U.S. investors went into a long weekend with a significant data point due, but no way to trade on it.
That calendar-driven liquidity gap is important. Historically, when a big jobs number lands over a holiday, you can get outsized moves at the reopen because everyone is trying to reprice at the same time. So, position sizing and risk management were front of mind.
Yeah, that tracks. Futures weakness into payrolls tends to translate into higher volatility on reopening.
And because the S&P had been roughly 2.1% lower since October 2025, analysts were already describing the broader backdrop as fragile. So, a weekend surprise could have exaggerated effects.
Let's talk visibility versus fundamentals. NVDA. The company was confirmed as a participant at the AI Global Summit in Bologna, alongside Anthropic and OpenAI on April 3rd. That drove reputational visibility, but it didn't include any fresh financials.
Exactly. Some commentators see that summit appearance as a sentiment accelerator for AI-related names. It bumps developer attention and media coverage, and that can pull in capital flows even without new earnings. Others cautioned it's not a fundamentals event.
So the distinction is simple. Visibility amplifies narrative, which can move prices. But unless there's a financial disclosure, it doesn't change cash flow assumptions. Analysts said the effect may be asymmetric, strong for momentum, muted for valuation, unless followed by substantive announcements.
Honestly, I was a bit surprised by how much weight people put on summit appearances. But narratives do move markets, especially in tech and AI.
Totally. Now, one of the more prosaic but important parts of the story was the batch of Form 8K and 8K/A filings that hit on April 3rd. Companies like Blumia, AsiaFin, OSR, Braemar Hotels and Resorts, Alta Equipment Group, and Stone Point Credit Corp filed disclosures investors needed to inspect.
Right. And there was a mix. Some were routine, like item 9.01, financial statements and exhibits. Others were potentially material, like Braemar disclosing a definitive agreement, or Stone Point reporting unregistered equity sales. Those kinds of items can affect capitalization, dilution, or contractual exposure.
Short version, 8Ks are the low-cost way companies update the market between periodic reports. The exhibits are where the operative details live, so analysts stressed, read the exhibits, not just the headline.
Right. For practical listeners, that means pulling the filings on Edgar and checking the exhibit package. If a form lists an unregistered sale, that can signal potential dilution. If there's a material agreement, that can affect a REIT's asset base or leverage.
And remember, some filings are placeholders. An initial 8K might be procedural, and a follow-on amendment can add the actual documents that matter.
So what did analysts agree on, and where did they split? Agreement was pretty clear. Werner's move was a momentum signal. The Good Friday closure created reopening risk, and reading 8K exhibits was essential. Debate centered on whether Werner's jump was durable and whether the NVIDIA summit was a lasting fundamental catalyst.
Exactly. On Werner durability, some saw a re-rating tied to the quarter. Others flagged the risk of mean reversion after a significant single-day pop. And with NVIDIA, narrative momentum can persist without immediate changes to earnings estimates.
Let's walk through how this mattered for different investor types. For short-term traders and quant funds, the payrolls print, earnings windows, and summit visibility signaled heightened event risk and intraday volatility on Monday, April 6th.
Traders faced larger bid-ask spreads and potential execution risk. Liquidity can concentrate, and rebalance flows can exaggerate moves, so sizing and stops were emphasized.
For long-term fundamental investors, the note was to revisit the Q4 disclosures for names like Werner and not act on headline performance alone. Read the exhibits attached to 8Ks to see if anything truly alters long-term cash flow assumptions.
Income and REIT holders were told to look closely at Braemar's material agreement for potential effects on asset valuations and distribution sustainability.
Credit investors needed to pay attention to Stone Point's unregistered sales for any implications to equity cushion or subordination. That can affect lender protections.
Retail investors were reminded that a holiday closure plus a big data print means potential opening gaps that can blow through stops, so size positions accordingly.
All right, some practical next steps analysts suggested. 1. Read the exhibits on the 8Ks. 2. Prepare for Monday's open with position sizing and stop management. 3. Mark earnings names on your calendar, especially the list Morgan Stanley flagged as possible surprise candidates.
4. Separate narrative from fundamentals. Treat summit appearances as sentiment amplifiers unless followed by real financial news. And 5. Monitor follow-on disclosures because initial procedural filings sometimes get corrected or supplemented.
Short reactions. Yep, good point. Absolutely.
Closing synthesis. Friday's tape closed with a few concentrated, actionable signals rather than a single unified market narrative. Werner's near 10% rally demanded follow-up on fourth-quarter fundamentals. The Good Friday holiday created an information gap ahead of the payrolls print that elevated reopening volatility. NVIDIA's summit appearance amplified the AI narrative without adding financials, and a set of 8K filings landed that investors needed to read at the exhibit level.
So, our key takeaways. Discipline on risk management. Read the documents and be ready for event-driven volatility when markets reopened on Monday. Analysts diverged on whether these were structural inflection points or short-term sentiment moves, and the definitive answers were going to hinge on the payrolls print, reopening flows, and the specifics in those 8K exhibits.
Final quick checklist for listeners. Revisit Werner's fourth-quarter disclosure. Pull any 8K exhibits that impact your holdings, size positions for potential Monday gaps, and distinguish narrative noise from fundamental changes.
And the investment disclaimer. This analysis was for informational purposes only. We did not provide personalized investment advice or recommend buying, selling, or holding any specific security. Analysts note risks and opportunities based on public disclosures and market data. Individual investors should consult a qualified advisor about their circumstances.
Thanks for listening. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. See you next time on Alpha Recap.